Milk Metaverse is a metaverse platform for the media industry that will bridge the gap between the content producers and the audience. Mediaverse from Milk Platform will be a combination of virtual reality, blockchain technology, and artificial intelligence. Visit the website metaverse.milk.global.
Welcome, everybody. This is Adrian Zdunczyk, CRYPTOBIRB, talking to you straight from my beautiful office. This is day 4 of our actual event, day 4 of Free Trading Congress that is streaming live worldwide to thousands and thousands of people. This is pretty amazing. Day 4 out of the entire 7-day cycle. This is an event that we host only once a year, and this is yet another rendition, yet another attempt of my technical tools and technical toolkit and technical skills to show you and help you decide if Bitcoin and stocks are ready for reversal or this is just a major fake out. Let's give it a check in a moment. Welcome. How are you guys doing? Please let me know in the comments. This is Adrian CRYPTOBIRB speaking straight from my office. Some comments are starting to flood in. Drzewny Kocur, siema. Hello. Spraffers. Free is the best price. Yes, indeed. This is pretty cool. Free Trading Congress. Like I said, this is the 4th edition and the day 4 of our 4th edition. This is special time and a special moment for me, not only because I'm happy to again talk to you for the next 25-30 minutes to give you a little bit of a deeper outlook insight, for what's happening in the markets and whether or not we can talk about reversals or this is just some sort of like a major fake out. But before we rally into the charts, I want to let you know that right after this stream ends, I'm posting a big news announcement on Twitter, and this is going to go first to the newsletter subscribers. We have free newsletter for everybody. Free newsletter. I'll post the link right now, but this is very, very simple stuff. You can just copy paste the very same link and go to thebourbonist.com/newsletter or easy thebourbonist.com/congress if you also want it to come with free premium membership limited for limited time. So all that is again about delivering value. This is this time of the year that we feel like giving back to the community. I perfectly know what you guys are going through. I know how shitty of a year this has been. I know how lots of losses there have been on your side. I know how many people got wrecked in FTX, how many people got wrecked before in Terra Luna, and on top of that, the FTX came in, right? You cannot trust anybody in this field. Even the biggest people you would imagine they were credible, they happen to be scammers, right? This is really sad about the FTX. Personally, again, I didn't lose in there. I didn't lose in Terra Luna either. So it's maybe not that I'm lucky, but I'm definitely not unlucky this year, right? And my job is to help you guys just a little bit to commit and hopefully let you navigate through the markets better, faster, and easier, so that just maybe you gain a little bit of alpha out of that to combat all of this shit and madness that's been going for everybody in 2022. Let's give it a check. So this is, Bitcoin versus stocks or Bitcoin and stocks reversal. Do they reverse in tandem or do they not reverse together? Is this a major fake out? Let's give it a check. We're looking at the market summary to start with. So we can tell that overall, the Dow Jones for the first time this year is pressing higher. This is first time ever that we are looking at the double cross setup. We are talking about long-term moving average, which started to flatten out just a little bit. Now this is 200-day mean, right, which represents the bear market trend. So as long as it moves down and descends, it is a bear market. As long as it kind of like starts to flatten, it means that most likely we have just escaped the bear market, not necessarily right into bull, because there is always this moment of consolidation, this period of sideways after the bear market. However, it's definitely a much more promising sign than not. Bullish crossover over the shorter term mean 20-day average, crossing over 200-day after it had crossed basically over the medium term trend. So we are looking at a setup where the short term trend exceeded sharply and strongly and decisively above the medium term downwards tendency and the long term downwards tendency. This is bullish. This is double bullish, okay, for Dow Jones Industrials. However, like I said, this is not a bull market. The bull market is defined by an inverse situation that we're looking at, this red curve, right? This is the bear market because the primary trend, the 200 long-term trend, 200-day trend, moves down and descends. Inversely, the bull market starts when this shit starts curving up, right? I hope it makes sense. S&P 500 is lagging a little bit. However, it's facing this local chance and an opportunity with making a little bit of a higher high, following this some sort of like a bullish flag, if you will, on lower time frames. It's very similar case, but it's lagging a little bit, right? S&P 500 is somewhere over here. It's also bounced, but it's somewhere over here. So it's lagging behind Dow Jones Industrials, which eventually may work as this self-fulfilling prophecy, or traders would see some sort of like arbitrage opportunities, if you will, to an extent per se, not directly, and let's expect perhaps for it to catch up higher. So that might be the case. That actually might be the case, right? Please let me know if it makes sense so far. See, Ron, welcome, bud. I appreciate all your work. Much loves to you, but Drevny Kocur, my buddy. Yep, fucked by Luna. This is it, man. I mean, it is what it is. We've seen it. We've seen it everywhere this year. So you're not alone. I know very well. I've been there. I've done that. Blew up many of my accounts in the past. I'm happy and honored not to be in this position anymore. Happy to have gone through this full designation process and years of studying to become an official accredited technical analyst, the only one from my country with the title of the CMT chart market technician. This is pretty cool, but not because I can loud about it. To be honest, I don't really care much about certifications anymore. I don't need it, but I care much about that it comes, that what I teach, that what I have as this responsibility to help the community learn, that I know that it's of high quality, and it's something that really matters. Back to the markets. So we know that S&P 500 is yet to catch up. It positively may impact eventually this picture in the short term, right? We'll see, of course, the geopolitical tensions are still there. The Russia-Ukraine war never ended, so you never know, at any time it can be canceled. However, things are looking good. For stocks are looking really good. Dow Jones Transportation is also lagging a little bit between the industrial, but it's moving in the same direction. So the Dow principle, where two moving averages, industrial and transportation are moving in the same direction, which shows just a little bit of a light at the end of a tunnel for the first time this year. Okay, that's why it's significant. That's why it's important. For the first time this year, stocks are showing strength in the chart. Okay, again, this may not necessarily be the bull market immediately, but this is a huge red flag and huge warning, okay, for the bears. That's the way to approach it. Then we're looking at consumer discretionary, which is a cyclical stock for the ETF sector, for this consumer discretionary of the S&P 500, moving sideways, so lagging a little bit between high gap stocks. However, it's also we're also looking at this high consumer staples, right? So defensive stocks are also kind of like, again, strong. It also comes with very historically high energy prices. Right now, it's consolidating a little bit. There is this situation for a potential distribution. In my opinion, we're looking at a couple of those tiny little gaps. Not sure you see them, but the more of those types of gaps you see congesting one after another, just like here, then this is what defines a potential setup for what we know as exhaustion gaps. So there are three types of gaps. There is a breakaway gap, just like this one, right? That just breaks away from a certain pattern, that it's a fresh new start, like this huge injection of a power and the force in a new direction. This is a breakaway gap. This is a breakaway gap. Okay. Then typically you would search for something that we know as measuring gaps, right? You can see it, for instance, here. So the measuring gap happens in the somewhere in the meantime, somewhere in the half of the distance, most likely, right? And you can tell that it pretty much matches. Maybe it's because of self-fulfilling prophecy, who knows? But it doesn't matter because it works, right? And on the other side of the end, on the other side of the chart, just like here, you're looking at exhaustion gaps, just like here, tiny little one. When you have a setup that there is a strong move up, then an exhaustion gap comes up and it closes on the same day, on the same week, and then it rallies back and another gap comes up and another time it's closed, then because those gaps get closed fast, it confirms to me that those are exhaustion gaps. It means that the trend is exhausted, so it stumbles. It basically tumbles. It's it's on stance. It's on standby, right? It's not growing anymore. It's kind of like congesting, and that's what is exactly happening here. So this tells me that there has been a significant breach of a 20-day trend, of the short-term trend for the energy, right? After this massive incline and rally. So potentially, if this actually proves to be this, expanding, broadening wedge, broadening megaphone, whatever you name that, doesn't matter. This much more resembles and looks like a proper distribution pattern than it looks as if it was a continuation. So just maybe you're looking at a little bit of this come off coming for the energy prices. If that is the case, then well, risk asset stocks and cryptocurrencies could react positively to it. However, trends are still looking strong, and as long as our trends are looking strong and they keep ascending, this makes it a good candidate for some sort of like a fake out, right? As many traders would expect. Okay, this is like the top. This is it, right? I'm just going to short it here. But the trends are moving strongly against you in this opposite direction, then this is where you can get wrong, because trends tend to persist. So again, at least wait for the pattern confirmation, for this pattern breakdown, perhaps in some sort of like again rounded top short forming. Let the pattern confirm the direction, let yourself see the breakout, and then act upon that. Then following, we're looking at for the first time also this year, a significant break on the bond prices. So 30-year bond prices are pushing higher. This is significant, almost 1%, 0.79% higher, 1%, one basis point actually move up from here, from the daily open. And this works inversely with the 10-year yields. So 10-year yields are right now rejecting the short-term and medium-term trend, right? This is an interest rate, 10-year interest rates. This tells me, because of inverse correlation, or should I say negative correlation and inverse relationship between the bond prices and interest rates, right? The Fed selling off the balance sheet, the Treasury selling off the bonds, they increase the interest rates, because the selling the bonds decreases the prices of the bonds, which we've had seen throughout the entire of the year so far, which eventually pushes the interest rates and yields higher, right? And inversely, if the prices of bond come up again, this pushes, or I should say pulls, the yield index lower. So here again, this is looking just a little bit like this head and shoulders pattern, right? It's not perhaps confirmed just yet, but it's looking like this proper head and shoulders pattern to me. And it would make a lot of sense. First of all, because there's been an extremely strong, rapid move up for this whole year, basically. The long-term trend is still defined to the upside. The medium-term trend, the blue curve, has started flattening out just a little bit. You can tell that it's kind of like changed, smoothened and flattened its angle, right? So it's hard to guess what's going to happen next, of course, but you can tell there is this technical weakness, because short-term trend is crossing to the downside, crossing over this medium-term trend, okay? And there's this price action, this yields index actually, again, consolidating below, or I should say bit under the broken support levels, right? This makes it a good candidate to push lower, to follow through lower. And if that is the case, the head and shoulders pattern is completed. And if it is completed, right, then, well, the more aggressive version of it kind of like was completed already, if you will, right? So there was this left shoulder, head, and the right shoulder. However, it's a little bit less credible. So I would wait for this major kind of like, again, breakout to the trend line that you can see as that neckline, maybe. Okay. Perhaps one more boost to the upside, but eventually, when the bond prices are pushing higher, yields should go down. And if that happens, the stocks and cryptocurrencies are more likely to go up than to go down. Dollar is also rejecting short-term averages, right? This is a big fund dollar index, bullish fund for the dollar index, rejecting 20-day average, rejecting short-term trends. So this tells me that in the short term, there is a lot of weakness. When there's a lot of weakness, it gives room and space to grow for the risk asset and for cryptocurrencies and for stocks. Doesn't make sense so far. Sultan Shakir, thank you so much. Didn't know you're a SIMT. I'm really happy to have claimed this title early this year. I think it was in August that I got this official diploma and confirmation. Thank you so much. I think some people don't realize that the market is essentially closed until Monday, except for the half day tomorrow. It does make sense, of course. However, it is still important to keep the track of what the market is telling us right now in front of the charts, right? I think it does make sense. So if we go higher and further down the rabbit hole, what we're looking at is, let's have a look at this overall industrial, the S&P 500 outlook for these sectors, right? So we can tell that again, moving from the very first days of the year so far, you're looking at a distinct leadership on the energy prices, right? Distinct leadership of the energy prices. I'm talking about this one. This is a sole rider. This is the first and the only winner for this year, basically. Maybe some like utilities, some staples, a little bit of the defensive stocks are again trying to break even as they had tried over this year so far. But it's just there's one king, and this king is energy, right? This king is energy. Of course, it's highly maintained and retained at the higher prices, also because of supply fears, supply shrink fears, supply pressures coming from this geopolitical dangers and threats from Russia-Ukraine war, right? Because Russia is, of course, one big distributor for the oil up there. So as long as they keep their hands on the oil and they run the war, basically the oil supplies are in danger, right? And this builds fear and a lot of uncertainty in investors, which makes them buy typically, as people tend to, and traders tend to buy in fear quite often of missing out, right? Of missing out that there is not going to be oil anymore. You've seen, I think, what happens whenever the COVID started, right? People were really acting irrationally, were rushing over and buying out the entire grocery stores, which wouldn't make sense, just to buy thousands of bags of rice, never to be eaten after that. So having so much of the market summary, we know that, again, the situation is definitely not looking too much promising for this entire other set of sectors, right? So we're talking about technology, industrials, materials, communication services, cyclical stocks with discretionary, consumer discretionary. So all of them are looking down. All of them are on average year to date 30% down. Some of them 10%, maybe 5% down. Some of them break even, but sole ride from energy is unquestionable. And this means, again, that having high energy prices, it works like a hidden tax. It leaves you less money in your pockets. It leaves less disposable income that you can deploy and invest in capital and financial markets, right? So it means that there is less liquidity, less interest, less buyers, and less chances, lower the chances that the market is going to go up eventually. So I would argue that the stocks overall are looking fine, right? The strong energy pattern, again, may turn to the downside a little bit in the short term, which could inspire a little bit of a rally on the cryptocurrencies, in my opinion. But first, it needs to be confirmed, right? So far, we've been seeing nothing but extremely big rally ever since 2022 started to the upside. No question about that. Okay, and as long as it keeps moving up, then it's not healthy. Netflix, as the big cap from the FANG index, basically is also ripping a little bit higher, is breaking successfully for the first time this year. Also, notice that, right? Significant weakness before, and now for the first time ever, it's breaking over the main neckline resistance, if you will, at 250, and it's breaking higher. It's moving higher for the first time, making higher highs, higher lows, right? This is positive. This is positive. The more of these charts we see, the better. And now, how does it all translate to Bitcoin and to crypto? So, here having a look at the Bitcoin USD chart on the weekly time frame with both the 50-week average and the 200-week average, so long-term trends only. Okay, we are looking at the bottom of the chart at the 7-week correlation coefficient versus S&P 500. What it tells us is how strongly related, how strongly and intimately in relationship Bitcoin is versus or against the S&P 500. So we know that whenever they go to the extremes, which is close to -1 or 1 positively, those are very strong relationships. And if it's plus on the plus side that it held, that it had held most of the time this year, then this is what we call positive correlation. Positive correlation means that those markets, Bitcoin and S&P 500 relatively, tend to move in the same direction. And the stronger the correlation is, the more the chances are that they move in the same direction. And conversely, if we're looking at inverse relationship and negative correlation at minus 0.66, okay, this tells me that this is a strong negative correlation, which kind of like flipped and changed this overall tendency. This is the third time, and the first time we're staying here this long, the third time only that we've seen in 2022 negative correlation, but this time it's definitely the strongest one. It's the strongest since we got ever since, as it seems, basically, ever since, let me get the line there. There you go, since 2019. Such a low inverse relationship, strongly negative correlation to the downside, basically tells us that those markets move in dissonance. So S&P 500 is pressing higher, which we've seen in the charts. Like I am saying, it's about to break 200-day trend, and Bitcoin is lagging heavily. It's underperforming. It's underperforming very much. And as long as it does, and as long as it is, this means that this tendency is supposed to be maintained, right? That because trends and momentum principle work in practice, the trends tend to persist, and there's better chance that once a pattern shapes, once the trend line shapes, it's more likely to be followed in this direction, much more than reversed at any time, right? So I hope it makes a lot of sense to you guys. By the way, please drop a couple of questions. I'll try to answer some of them. Even if not during the show, then I come back to you happily and answer with huge excitement right after the show, right, on YouTube. If you're watching that on YouTube, make sure you hit a like and share this video with your friends who are struggling, because this is definitely not an easy time. And I just hope you're enjoying Free Trading Congress so far, and day 4 in. Let's see. So what does it tell me again on the lower time frames? Oh, this is the trading view. What does it tell me on the lower time frames? If we go to the daily chart, well, it tells me that first of all, the trend is moving down. So this is not a bear market. Not a bull market, not an inversion of a bear market. So of any kind so far, right? This is definitely not something to be extremely optimistic about, right? We know that this main dominant trend, this dominant tendency has been moving down, and it's not willing to reverse anytime soon, which makes me feel that this correlation, like I said, negative, strong correlation between Bitcoin and other stocks, can even be more enhanced and empowered to go deeper, right? So it means, again, that the higher the stocks may go, the more capital they're going to withdraw from hungry investors trying to position themselves in cryptocurrencies, which are not ready to reverse just yet. Stocks are starting to reverse for the first time this year successfully, and Bitcoin is definitely not out of the woods yet. In fact, it's getting deeper and deeper following this major support break. However, we've seen just a little bit of a red flag wave coming. The bulls started waving red flag to the bears, but just for a tiny little moment, because we've seen this local chart pattern called a pennant, pennant, basically a bearish pennant, right? When you see a strong, sharp decline and the market takes a breath, it often consolidates in this sort of like a contracting manner, forming this triangular shape of pattern, which is called basically a pennant, right? Or a bearish pennant if it's in a downward tendency, or a bullish pennant if it's in an upward tendency. So here, typically, we call it as a half mast formation. Half mast means that having this mast or a pole here, having this flat, a little bit of a pennant here, this means that using the measured move technique, this move is supposed to print the target for the breakout, provided that it breaks out successfully, that is of equal measure or similar measure to this pole size, to this mast size, right? So most of the time, those patterns work as continuation patterns, and you see them happening just like those measuring gaps. They often come with measuring gaps, to happen somewhere in the middle of the road, somewhere in the middle of the journey. So here, looking at this local invalidation on the downwards, this overshot bottom, this overthrown bottom, this tells me that, again, whenever there is a breakout failure, right, we break the support, but then we rally back immediately, which is what happened right now, kind of like 2-3 days ago. This puts those entire people who shorted and who are under the surface, under the support line, underwater, at times forcing them to cover for their positions. But what it matters, why it matters the most, is that because failed patterns tend to perform better in the opposite direction. So what happens is that you often get to see this major dump decline as support starting to form, right? Then there is this support breach, and the market doesn't stay there for long, but it kind of like rallies back above it, right? And as long as it rallies back above it, like I say, those guys are on the water, and they have to purchase buyback in order not to get wrecked, in order not to lose. They lose, then buy back higher, but they don't want to, risk losing more. So this means that they are buying back, which increases the demand pressures, which pushes the prices higher, which eventually breaks the stop losses and commits with this so-called short squeeze, right? So that's why failed patterns, failed support breaks tend to perform better in the opposite direction. All right. So imagine you have again a head and shoulders pattern, right? Just like similar you would see there early in the charts. Imagine it breaks to the downside, but then it actually rallies back and fails to maintain those low prices. It fails to follow through lower. It climbs back above the broken support. This invalidates this bottom breakout. And this means, again, all those guys have to buy back higher, which pushes the prices higher, which triggers additional stop losses, and the story repeats, committing to this self-promoting loop higher, and making this more explosive move in the opposite direction. So false patterns, false breakouts, fake breakouts, swing failures, breakout failures, whatever you name it. As long as the pattern fails and it's not going the way it's supposed to go, most likely the market reverses, even if it's for the short term, just for a couple of hours or for a couple of days. Nobody says that this is a bull market immediately, right? Then as long as it fails on the breakout side, this tends to empower and fuel up the move, a stronger drive in the opposite direction, right? The breakout of the support, the break of the support tends to make people look to the downside because it's bearish, and it is. But if it fails to maintain those low prices and it climbs back above, then typically it reverts and the odds and makes it potentially more promising to go higher. So does it make sense, everybody? Please let me know so far in the comments. I'll try to grab one or two questions before I wrap the show, because I've got an important announcement to make. LJ says, invert the graph and it looks like 2020 election. Correct. Do you think the short squeeze is over? Rather, will it continue? The bigger the chances are that, well, we are in the failed pattern, which tells me that more chances are that we're going to move higher, right? So I would argue that the chances are that we're going to move higher, unless, again, some unpredictable event from the outside of the market comes in. You never know when there's a hurricane coming. You never know when there is like an asteroid crash it into Earth, or it doesn't matter when again, I mean, you don't know, you cannot guess with the help of Bitcoin charts when Russia-Ukraine wars expand to other countries, right? So charts are not going to tell you that, and you have to respect that whenever there is some disruption from the outside of the market, right? This definitely, just distorts the chart, right? It doesn't make it look any good any longer. I have agreed. Definitely enjoying every bit. Thank you so much. Sultan Shakir Asteroid. Yeah, correct. That's it, man. I mean, I promise. I promise that's it. Dead cat bounce, break 25K and I start being bullish again. That's right. That's right. I have to agree, LJ. Very good point. 25K seems to be this main line in the sand that is going to, again, make Bitcoin more likely reversed to the new bull market, or at least, just like stocks are doing, Dow Jones are doing, at least pause and move, the bears into the reserve, right? Into the reserve. So that's the point. How to know whether or not it's a fake out or it will keep going down. So as long as the pattern looks the way it's supposed to be, looking the way it's expected to look, then it's a good regular pattern. Otherwise, it's a fake pattern. It's a failed one. Congress is awesome. Thank you so much. Congress Day 4 from LJ again. All good stuff, guys. Thank you so much. This is pretty awesome. Yeah, listen, I'll have to wrap in here. I hope you're enjoying the Free Trading Congress Day 4. This has been the last show for today. And if you guys, let me remind that if you are not subscribed to our Congress or the newsletter, you can get it at theburbness.com/Congress, right? So you can just, again, go to birbness.com, you type in Congress, and that's where it takes you for a free limited membership. Not only you're going to get all those insights in our free newsletter, but also you're going to get free membership. This is a no-brainer, okay? The value is insane and immense. And what you're seeing on a Congress so far, like here in these YouTube videos, this is just the top one. This is just something that you don't see. It's about the things that you don't see outside of YouTube, right? This is where the major action happens. So rush to sign up for the birbness.com/Congress. This is free of any charge. You're not going to be charged any slightest bit. And if you appreciate it, if you enjoyed this comment, again, make sure you hit the subscribe button, smash the notifications, likes, smash the comments as well, drop some nice notes if you enjoyed this, and watch for Twitter, because huge major announcement, and I'm super excited. I cannot hold my excitement for it. It's super exciting to actually announce this major change in the first time ever thing coming up. I hope you see that. Subscribe for our free newsletter. Stay notified. In about 25 minutes from now, the news is going worldwide. Be there. I promise it's going to be worth it. God bless you all. Thank you for tuning in for the last show of day 4 of our Free Trading Congress. God bless you. See you around. Bye-bye.